Welcome back to Dunn TV. In this episode, we're looking at my top 50 crypto trading and investing lessons that I've learned over the past 5 years. So about 5 years ago, I shifted my focus away from the traditional financial markets to focus 100% on cryptocurrencies. And that was the best move I ever made. And a couple of weeks ago, I wrote this blog post explaining why I shifted my focus away from the traditional stock market and other financial markets to focus on cryptocurrencies, and explained how in October of 2015, I tried to convince a group of over 500 stock traders why I thought Bitcoin was going to be the best market to trade and the next big thing, the next big boom. And so over the holiday break, I took some time to really reflect on what this past 5 years has been like and a lot of the lessons that I've learned. And I wanted to do this to help both new people that are just getting into crypto, because there's a lot of misinformation being spread, and also you guys that have been watching and trading and investing with me over the past 5 years. Just wanted to kind of do a recap of a lot of the most important things that I've learned. So without further ado, let's jump right in. So lesson number one is everybody is a genius in bull markets, or when markets basically go straight up, but real traders can not only survive but actually thrive and make even more money when markets go down or they become highly volatile. And to piggyback on that point, lesson number two is don't be a blind bull, right? Don't just expect markets to go up forever. All markets are cyclical. I don't care if it's cryptocurrencies, the stock market, housing, gold, right? Markets go through cycles, and over the past 7 or 8 years, Bitcoin has gone through about a half dozen big boom and bust cycles. So to lesson number one, learn how you can also make money when prices come down. Lesson number three is there's a big difference between a trade and an investment. An investment is where you buy low and you hold for the long term, expecting price appreciation, where a trade is where you have a set plan and you buy and sell, expecting to make profit and grow your capital that you can use to put into investments. And with that said, lesson number four is if you do have a trade, fully plan that trade before you pull the trigger on an entry. And talking about having a trading plan, entries on a trade are important, but it's the risk management and where you take profit or cut a loss off that determines if you make or lose money on trades over the long term. And lesson number six is beware of get-rich-quick gurus or internet marketers that have been jumping on the crypto bandwagon over the past several months. You know, I see a lot of misinformation being spread in the crypto space, and there's a lot of people that, just chase hot niches, and be very careful of taking advice from somebody who has just now started to get in crypto over the past year. And lesson number seven is decide what types of trades or investments you'll take and ignore everything else. 90% or more of market activity is actually noise. So if you can remove the noise, create a plan, know what types of trades or investments you look for, and push everything else to the side, it's going to free up a lot of time and help you focus on what actually matters and what will make you money over the long term. Lesson number eight is if you've made a lot of money in cryptocurrencies, don't assume that you can just as easily make money in other financial markets. Well over 95% of active day traders in the traditional financial markets lose money. That's why 5 years ago, I shifted my focus to cryptocurrencies, because I saw the profit potential. And I would just, again, encourage you, don't assume that all other markets are just as profitable, because they're not. And to that point, lesson number 9 is the best strategy for day trading cryptocurrencies is to don't do it, which leads us into lesson number 10, which is the best way to profit in a market is to find something that you think has big profit potential early before the mass amount of market participants or investors or traders know about it, and invest assuming you're going to lose 100% of your capital, right? That's what I call the angel investor approach, right? If you invest in, say, 10 startups, if 9 of them fail, the goal is that one winner is going to make up for all of those losses and then some. And I think this tweet that I put out a few days ago says it perfectly. Overactive day trading is kind of like fighting an elephant for peanuts, right? You're probably going to get crushed, but even if you do win, the reward just isn't worth the effort. The biggest profits typically come from investing in good projects early or swing trading highly emotional or volatile markets. In other words, catching the big moves, right? Looking for 50%, 100%, or 1000% moves, which have been commonplace over the past few years in cryptocurrencies, aside from just fighting for peanuts where you're going to burn out, you're going to spend a lot of money on commissions. You're going to be fighting computer algorithms, right? In my experience over the past 15 years, I've found that it's just way easier and more profitable to look for those big swing trades and early investment opportunities. And lesson number 11 is you cannot control the market, right? The only thing that you control is your entries, your trade size, right? How much capital you put into a trade, and your exits. Everything outside of that is out of your control, which leads us to lesson number 12. And why lesson number 11 is so important is one market participant, meaning one whale, one investor, one trader, one computer algorithm can completely destroy good technical analysis. For example, let's say you have a good breakout trade setup, right, that every technical analysis book agrees is a good trade setup for a breakout trade. And let's say one market participant goes, you know what, I want to dump $5 million of this coin right now. Well, that's going to make that breakout trade completely fail, right? And again, you don't have control over other investors and other market participants. The only thing you can do is control your entries, your trade size, and your exits. Lesson number 13 is become a self-sufficient trader or investor. Don't try to just blindly follow trade alerts or trade recommendations from anybody, especially people on social media or in chat rooms. It's one thing to look at other successful investors and traders and try to model what they do, but actually learn what you're doing and understand risk management and trade setups and know why you're getting into a trade. Because if you're a sheep and you're just trying to follow like pump and dump groups or something, you're going to lose over the long term. Lesson number 14 is all financial network marketing projects or multi-level marketing or anything that requires you to recruit somebody to get paid. Any project like that that is financial in nature is a Ponzi scheme, period. I'm looking at you, BitConnect. And lesson number 15 is if you make a life-changing amount of money, do nothing for 30 days, right? I think the worst thing you can do is make a lot of money and then go buy a Lambo or buy some kind of depreciating asset, right? I think a better goal for crypto investors and traders is to become an accredited investor, basically somebody that meets a minimum net worth requirement that will allow you to get access to better deal flow, bigger projects. Lesson number 16, trading is not about picking exact lows and tops in a market. It's about catching the meat of a move. Lesson number 17 is don't turn what should be a small losing trade into a long-term, massive losing investment. Number 18, I think it's a mistake to set like daily profit goals, right? It's better to set long-term performance goals. And the reason for that is because you don't control what the market does on any given day. So if you're like, well, I want to make $500 or $1,000 a day, sure, sometimes the market might offer that to you. Sometimes if you cut off your goal too early, if you're like, hey, I hit my $1,000, maybe that could have been a $20,000 or a $50,000 day, where other days, if you try to push for that minimum goal, instead of not only hitting that, if you force bad trades and bad investments, you can actually go the opposite way and start to lose money unnecessarily. Lesson number 19, I think, is really important for newbies. It's first learn how to survive in the markets and then thrive, right? First learn how to not lose money. And then once you learn risk management over the long term, you'll actually thrive. Lesson number 20, the best charting indicators. So if you're looking at a price chart, the best thing to look at is price action and volume. For example, this chart with just the price and just the volume is much better and much more effective than a chart that looks like this, where you have a bunch of random indicators that oftentimes are conflicting and giving you false signals, right? A lot of the best traders I know just use price action and volume and then different ways to quantify or measure that price action. Lesson 21 is trends. Price trends can go much further than anybody expects, right? Than what seems rational. And that leads us to 22, which is why I don't try to pick tops in a market. I wait for the market to tell me when a trend is over. And a lot of times that means I don't get out at the exact top. But again, trading and investing isn't about being perfect. It's about catching the meat of a move. Number 23, don't try to trade right in front of a big scheduled news event, right? Like a big announcement, because it's virtually impossible to predict how market participants will react to a news event, right? So, like a lot of times, if you have really good news, like if you have scheduled news and it comes out and it's good news, if that's already priced in, if people have been buying in anticipation of that, the market, even though it's good news, could actually go the opposite direction. It could actually go down, right? And there's a saying that says, buy the rumor, sell the news, right? And again, over the past 15 years or so, I have not been able to accurately predict when a big news event is scheduled and when it comes out, no matter if it's positive or negative. So what I like to do is just sit on the sidelines before a big news event. Lesson number 24, the biggest challenge for most traders is actually their ego or their need to be right, which leads us to number 25, which is actually you can make a lot of money even if you lose 50% of your trades or your investments, as long as you learn how to properly manage risk, right? And that goes against what a lot of people are taught in school, which is if you get a 50% on a test, they're probably going to fail you, right? But in trading or investing, I mean, you could win 10% of the time if your risk to reward ratios work out properly and still make money. And number 26 is, in my experience, some of the best entrepreneurs or CEO types or managers typically make the worst natural traders and investors because those skill sets are actually polar opposites, right? A lot of the things that make a great CEO are some of the same things that will lead to him being a bad investor. And on the flip side of that, lesson 27 is people with the best kind of natural mindset for investing or being a good trader are typically those people that have experience or are in like high risk careers, like firefighters or pilots or policemen or doctors, people that are used to in their day-to-day lives working in high risk situations, right? And if you can train your mind to be under control when the market is dumping or breaking out, right? A lot of times that's the hardest thing for traders. And so people that are used to having that CEO or that salesman mentality where it's like push, 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 and more is more, a lot of times in trading, the opposite is true. Number 28, avoid pump and dump groups like the plague they are. 29, you will make every mistake in the book. Don't beat yourself up about it. When you do make a mistake, right? If you jump out of a trade too early or you get in too early or, if you buy instead of sell, right? All of the hundreds of mistakes that you can and will make in trading, don't beat yourself up about it. Just learn and try not to repeat the same mistake twice. Lesson number 30 is don't treat cryptocurrency exchanges like bank accounts that are FDIC insured, right? The best place to store your coins is in a hardware wallet, and unless you control the private key, they're not actually your coins. Lesson number 31 is you can't catch every trade. Cryptocurrencies trade 24 hours a day, 7 days a week, 365 days a year. You are going to miss some big winners and some losers. You're going to miss out on some trades that would have actually lost. So don't worry if you miss a trade. Have what I call JOMO, or the joy of missing out, instead of FOMO, fear of missing out, which can actually cause you to chase and buy at a much higher price than you should and actually lose money. Number 32, don't invest in a crypto asset for the long term unless you really understand it inside and out and you truly believe in it, right? There's a lot of just a ton of capital flowing into cryptos right now, and there's a lot of people just throwing money at projects that they have no clue what the value of that truly is. They're just buying because they hear other people are getting rich. If you want to minimize your losses, only invest, right? There's a big difference between investing and trading. Invest in coins that you truly understand the value and you believe that it will succeed over the long term. And the other side of that is lesson number 33, where you can still make money trading the momentum and the hype of shitcoins, just don't use those as long-term investments. And number 34, stay away from coins with very low trading volume and low market caps, right? If you go to coinmarketcap.com, you'll see there's over like 1,300 cryptocurrencies right now. And I would say well over 90% of those don't have enough liquidity for me to be interested in trading them, right? If you stick to the higher trading volume coins, right? Coins that are trading at least, say, nowadays $5 million a day or more, what that's going to do is help you stay away from pump and dump schemes and getting trapped in a trade that you can't sell out of. Number 35, and this is a huge one because I see these stories of people like taking out mortgages to buy cryptos. Don't trade with money that you need for living expenses. You know, it's called risk capital for a reason. And the practical side of that is like if you're trading or investing with money that you know you truly can't afford to lose, then you're going to make emotional decisions. You're going to buy high and you're going to sell low, right? Everybody knows intuitively that to make money, you buy low and sell high. But there's a reason why 9 out of 10 people do the exact opposite. And the number one reason is usually they're trading with money that they can't afford to lose. Number 36 is when you're trading or investing, think of yourself as a hunter, right? Save your ammunition, aka your trading capital, for the big game, right? Don't shoot up squirrels and rabbits trying to chase, again, little moves here and there. Save your ammo, be patient, and wait for the big moves because that's where you're going to make the most amount of money. Number 37 is all cryptocurrency exchanges have been locking up or their servers crash when there's big volatility, right? When the markets are making big moves, sometimes you can't actually execute a trade when you want to. So the way that you combat that is if you think you're at a profit target and you think the market's going to have a deep pullback, you might need to start selling before the market starts to roll over and do a pullback. And the reason why is when everybody rushes for the exit at the same time, the exchanges lock up and you'll get these error notices on the exchanges. And a lot of you have probably experienced that. So the way that you combat that is start to maybe sell a little bit early right before you think the market's going to roll over. Number 38 is kind of funny, but it's true. Trading and investing brings out all your emotions to the forefront, fear, greed, hesitation, overconfidence, right? All of these things, when you're actively trading or investing, these come out. And so you have to deal with them. Number 39, this is one of my favorites. The hardest thing to do in trading is nothing, right? But that's also the thing that can make you the most amount of money is by sitting back and letting a trade work. Lesson number 40, and this is a big one for anybody that's just getting into crypto right now. Just because a market is in a bubble doesn't mean that it's going to die, right? There's this misconception that I see in the media all the time that, Bitcoin's in a bubble, cryptos are in a bubble. Yeah, Bitcoin's gone through half a dozen big bubble cycles, and each time it's recovered to have a higher price over time, right? So just price bubble alone doesn't mean that something is going to go away, right? When you have speculation that outpaces utility, that's a bubble. And yeah, cryptos over the past couple of years, we've seen more speculation than use or utility. And so that's why the market goes through boom and bust cycles. Lesson number 41, manage your trades in a way that would leave you with no regrets no matter what the market does, right? So when you're in a trade or an investment and the market's going up, say, would I regret selling all of my position? If so, don't sell all of your position. Or if the market's going up and you get to a profit target and you say, okay, if the market fell from here, would I regret not selling part of this position? If the answer is yes, then sell part of the position. It's that simple. What you want to guard against is trying to be all in or all out or be so perfect and precise that you miss the forest through the trees and you miss the meat of the move. Number 42 is learn to think like a contrarian. If you're somebody that needs the validation of everybody around you to tell you that you're right, trading and investing is probably not for you, right? Like a lot of times the best time to buy is when everybody says you're crazy, right? Look at 2015 before Bitcoin went on its epic run. When everybody is in agreement, when everybody's greedy, like the Warren Buffett quote says, when everybody's greedy, that's when I'm scared. When everybody's scared, that's when I'm greedy, right? Learn to think like a contrarian and get comfortable when people disagree with you, because that's how you make money. Number 43 is the shorter the chart time frame, the less predictable the price patterns are. For example, if you're looking at like a 1 minute chart at Bitcoin, you're going to see a lot of chop. It's going to be a lot of noise. On the other side of that, the longer the time period, like a weekly chart, the more variables you have to take into consideration, the more like global economic variables there are. So the further out in history, the harder it becomes to predict where price is going to be, right? So my kind of sweet spot is I use the daily chart. So every candle on the chart is 1 day. That's where I look for my trade setups, right? My entries and my targets. And then I use a 60-minute chart or 1 hour for each candle to time the entries, and yeah, just for timing. Lesson number 44, market conditions are everything. Some market conditions are great for what I call pushing the gas and taking every trade setup that you can possibly find, where other market conditions, it's best to slam on the brakes and pull back and stay away from the markets altogether. Lesson number 45, 90% or more of all cryptocurrencies will eventually go to zero. Invest accordingly. Number 46 is the mental side of trading and investing is the hardest to master, the most underappreciated skill, and it's the biggest thing that's going to cause you to make or lose money. So invest your time into understanding the mental side. Number 47, the three biggest problems that I see that most traders have are over trading, hesitating on their entries, basically when you have a good trade, not having the confidence to pull the trigger, and number 3, closing positions, closing a trade or an investment prior to your profit targets when the trade is still intact, when you have no reason to get out. Basically, you get shaken out when the market makes a little pullback, right? So learn how to kind of move past those, right? Over trading, hesitating on entries, and closing your trades too soon. Number 48, you can make a career's worth of profits in 1 year or on one trade. Think about that. Don't feel like every day has to be a home run, right? Boredom and impatience, and like I said on the last lesson, over trading are some of the biggest problems that traders have. And play the long game, right? Like, be patient and wait for the best plays. If you're just getting into the markets, don't feel like you have to chase every little move, right? Like, some of the best traders I know consider themselves retired, right? And they come out of retirement when a big trade or a big opportunity presents itself. And my motto is trade less, profit more. Number 49 is don't trust anyone else to trade for you. Manage your own high-risk investments like crypto trading, or don't participate at all, right? Like, if you have a long-term retirement portfolio in the stock market and you want to have like an investment advisor, that's fine. But if you're going to participate in highly risky markets like cryptocurrencies, either do it yourself or not at all, right? And by the way, just a side note, there's a lot of like fake social media accounts going around, people pretending to be me and other people in the crypto space saying, hey, send me money and I'll trade it for you. Those are 100% scams. I have notices everywhere. So if you see anything like that, please report it and get those profiles taken down. And number 50, this is a huge one for anybody that has recently heard about Bitcoin or cryptocurrencies. Take the news for what it really is, right? Like, news websites and TV shows are trying to get clicks and views. They are not looking out for your best interests or trying to help you make money, right? They're just talking about whatever is hot and whatever will get them views or clicks. So a lot of times, if you actually trade the opposite of what the news is doing, sometimes that's the best thing to do. So just don't expect that you can watch the news or read news and follow a news article and make money. So thanks for sticking with me through this entire episode. I hope it was helpful for you. I put a lot of thought into it. And the question of the day is, what is the best lesson that you've learned as a crypto trader or investor? Just leave that in the comment below. Like it up if you got value from it. Share it with a friend or anybody that you think would get value. And I will see you next time. Take care.